Okay, guys, good morning. As always, I will start with DXY. So if you look at the charts on weekly time frame, the DXY, after mitigating this supply zone, pull back down, building liquidity, both up here and down here. Market proceeded to liquidate this high, taking out all liquidities, pushing into this supply right here, before selling off also into the demand zone down here, as you can see. So looking at the weekly time frame, as you can see, market traded close to this demand zone, then push back up into this supply zone. Now it's coming back again. So what I'm expecting on weekly time frame is for price to push back down deep into this demand zone and possibly return back up. Reason why I think it should go back up there to this supply zone is because if you look at the charts, no other supply zone is capable of stopping the market. This other zone here has already been mitigated. This zone here has been mitigated already. Now, if you look at here, you can see that after this move, we still have a fair value gap between here and here. So here is the only potential supply zone I see market can go to. And the reason for that also is that if you look at the charts, you will see liquidity lying above here. There are stop losses here, trend line stop losses, which is likely to draw the price back up to that zone. So that is what I'm looking out for on the weekly time frame, which is a long-term trading setup. Going down to the daily time frame on DXY. On daily time frame, as you can see, market is still bearish. Integrated this supply zone, push back down, very close to this demand, push back up, and then right here you have a market structure shift here, which is a sign of for a bullish momentum. Having experienced this bullish market structure shift, what do we expect? What I expect currently now is that we have a demand zone. Yeah, price now, after pushing back up, push back into this demand zone. So right here is a long opportunity. And if you show long here, we have a supply zone here where I expect this price to push back into, which will give us a minimum of at least 1 to 3.3 ratio. Ratio. It's a very good trade to take. Do you understand? So on DXY now, we'll have a long opportunity here. You might ask, okay, what about this one that price that went back up and coming back down? No. Price, I feel this one as liquidity. Yes, I see this as liquidity because based on experience, this is a very strong demand zone. You can see the momentum here, fair value gap or imbalance, which led to this breakup structure and overall market structure shifts. Okay, so this particular candle here didn't fully mitigate that supply, which means all the others, institutional orders, they are still left over there. So I expect market to push back into that zone before a possible sell or continuation to this supply zone up here. So what you have here is a long opportunity. In case you missed it, then you go down to lower time frame and look for opportunity to buy from this zone now. On 4 hours, if you look at 4 hours charts, you see that 4 hours has been bearish, lower low, lower high, lower low, lower high, then all of a sudden we have a higher low, and then we experience a market structure shift here into this supply zone, then a sell-off. After that sell-off, we have a demand zone here. We have a demand zone which also corresponds with that daily demand zone. Then as of day before yesterday's showcase, the same market mitigated it perfectly. Personally, I'm on this trade and I'm targeting this high, this supply, 4-hour supply. Do you understand? Now, after mitigating this demand zone, market pushed back up. This is a supply zone here. Yes, price pushed up, but we don't fully mitigate that zone. But market move in waves. It will not just move directly and mitigate that supply. So what I expect to see is the possibility of market after it pulls down to this new demand zone, push back up to that supply zone, which will hit my TP. But at this point, I'm already on break even. So even if price goes back down and liquidate this zone, I'm not losing anything. I don't panic, take profit. After analysis, I make sure I hold my trade to my desired take profit. Okay. So if you've not entered this trade yet and you want to take advantage of it, one thing I will say here is that taking a look at this market structure, you can see that we have a fractal market structure shift here. Okay. So this market coming back down to retest this newly created demand zone here before continuation. All right. So that's what I expect to see. If you've not entered it, this will be an opportunity to enter the trade. Place your stop loss down here, which will still give you a good risk reward ratio of at least 1 to 3.2. So it's a good trade to take. So if you've not entered this, you can still take this trade on DXY. All right. Then going over to EURUSD. EURUSD is simply the opposite of DXY. So whatever you are doing on DXY, you should be doing the opposite of it on EURUSD. So going to the weekly time frame, just like DXY, as you can see, weekly time frame liquidating this zone, liquidating this high, then trade into this supply zone, push back down. Now still have this zone here, even though it was partially mitigated before, but that zone is still valid because this is weekly time frame. Okay, so market pushing back up. So on weekly time frame here, there's nothing I'm seeing on EURUSD. Let's go down to daily time frame. On daily time frame, after a fractal market structure shifts, market push back up, retest this supply zone. Now it's pushing back down. So what I expect on daily time frame is for price, after mitigating this zone, to push back down here, possibly react again, and then overall onto this demand zone. Depending on what the fundamentals will do, might still continue to this zone or all the way down. Do you understand me? But first and foremost, my first TP is here 1 to 2, 1 to 2.4 is my first TP. Second TP is down here. My second TP is down here. So once market mitigate this zone, how you take partials? For those of you who trade with me, you understand what I'm talking about. Those of you who trade with me, you understand what I mean by that. How I manage my position. So once market gets to my first TP, I manage the position, and then I can hold it all the way down, depending on how far the market can move. So on the 4 hours time frame, as you can see, price has not fully mitigated the demand zone. I'm expecting price to turn back to that supply and possibly pull back to this zone, go back up, or possibly return back down here. Okay, remember, in trading, you don't predict what will happen. You only react based on what market presents before you. Why this person don't really trust is because you can, if you look at this supply zone, you can further refine it. Market can choose to further trade deeper to this well-refined zone. Do you understand? To that well-refined supply zone. Okay, so it's possible that price can still violate this mini supply zone here and trade all the way back up here. Okay, all right. So in this case, if market trade back into this zone, what you need to do is to use confirmation method, go down to 1 hour time frame or stay on 4 hours and use confirmation method to take your trade as market trade back into this zone. All right. Okay. So that is it about on 4 hour time frame, Euro USD on 4 hours. And also one thing you need to notice is that this chart pattern you see here, we have the first touch, second touch, and possibly touch, the third touch. This is a kind of flat pattern. This is a kind of flat pattern here, with liquidity building up all the way down here. with a very good demand zone here, with momentum imbalance. Okay, so what I looking at for here is that I expect this price to pull down the way down here and give us a very good long opportunity. Okay, so these are still other zones. If you want to see all my zones, I mark my zones ahead of time. That is why analysis doesn't take me anything to do. I mark all my zones, all my key levels, P zones. When I wake up in the morning, it doesn't take me time to go skim through the whole market and know what to do. So if you want to learn how I do that, then you need to chat me up or admin on the group that you want to join our inner circle mentorship. All right. Okay. Now moving on to the next pair. The next pair on the list here is GBPUSD. So looking at GBPUSD, starting from the weekly time frames, you can see after market mitigated this demand zone on the weekly time frame, it pushed all the way up, return back, mitigate this demand again, push up, return back, mitigate this demand again, and now finally traded into this supply zone. This was a trade I took on weekly time frame. As you can see, if you can trade on any time frame, monthly, weekly, daily, 4 hours, those are my preferred time frame. I only use 1 hour as you're seeing here most times to just confirm my trade entry on 4 hours. That is it. So on GBPUSD, as you can see, on weekly time frame, the market is bullish. Going down to daily time frame, as you can see, markets give us a fractal shift in market structure. Here, as you can see, what we had there was head and shoulder pattern. This was head and shoulder pattern. Left shoulder, head, and the right shoulder. So if you know how to trade the chart patterns, head and shoulder chart pattern, then you should know what you should be expecting, and then this is your neckline. It's neckline. So after market mitigated this supply zone, that supply zone, you can see that massive drop all the way down. And then now market price is pushing back into this neckline, which is also a supply zone. So where I've not entered this trade because of what you see, market created a demand zone here before pushing into that zone. And right now you can see it's kind of ranging there. So I want to see a confirmation on lower time frame, like 4 hours before I should take this. I will take this shot. Reason also being that I still have another supply zone, very valid supply zone up here. Okay, of which this highs here, this trend line here is the kind of liquidity, buy side liquidity. There's a couple of drawing price up to that supply there before the price market will drop again. So on daily time frame here, I don't have any signal for shorts GBPUSD. But what I will do is to drop down to 4 hours time frame. All right, so this supply zone initially was mitigated, and then you see the massive drop. After mitigating supply, see that massive drop before market returning back again to that zone. Now you may ask me why, what makes this zone stay valid? If you look at this zone, you see how price left that zone. And this was where the real momentum started. You can see that. So as a result of that, you can further refine this supply zone. And you can see it's still fresh and valid. And looking at it down here, you can see the price has not really mitigated that well-refined fresh zone yet. Okay? So at this point, I don't rule out the possibility of price pushing back again, back into that zone. Or if price should go back there, I will short. Also, don't rule out this supply zone or new supply zone being created here. If price enters here and on 1 hour time frame, I confirm a bearish setup, I'm going to short. But if I don't see confirmation, then I'm waiting for this zone up here. The next pair I will look at is GBPUSD. On GBPUSD, if you go to weekly time frame, you can see all the way in 2023, 2024, and 2025, this particular demand zone here has been holding very strong. But at this point, if you look at the chart very well, this time around, price returned back this zone at this zone. There was no drastic move back to the upside. Rather, seeing some form of hesitation here. You can see that. And if you understand your chart pattern very well, you will see that this is a continuation pattern. This is a continuation pattern. This is a continuation pattern. Okay. So what do you expect? What I simply expect on USDJPY is a further drop, possibly. We'll have its whole liquidity down here. And this zone having been tested 1, 2, 3 times must have been weak by now. So I expect price will come down to this fresh zone down here on a long term. But that would only be possible if price is able to break through this demand zone here. See this demand zone here. Liquidating this zone is only possible if price take out this demand zone here. Now have a valid weekly demand zone here. So if this zone is taken out, then believe you me, nothing is going to stop the price from coming down all the way to this 136.344 zone. Okay. So going down to on weekly here, we have nothing to trade here unless if you enter the trade all the way from this supply zone here, then at this point you'll be on profit. Going down to daily time frame, we have this demand zone down here. So what I expect is that price having mitigated this particular demand zone, see, I've been hesitating now. See, also we see the chart pattern there, a continuation pattern. So I expect price to possibly push back into this zone. I entered a long here. Then immediately I saw this hesitation, market not going as expected. I closed the position. Yes, I took my profit at 1-to-1. I left. So I was waiting to see if price will return back to this refined zone so that we can short. But you see, market is not doing that. So at this point, I'm staying off. But if for any reason price return to this zone, I will be short. If price return to this particular demand, I will long. Those are the only two zones I'm looking for. Here and here on daily time frame. Meanwhile, on 4 hours time frame, you can see trading opportunity without waiting for that longer period of time. If you look at 4 hours time frame here, this was the trade I took yesterday on 4 hours time frame. I left this trade open. I just wake up this one and realize that it's now already hit my take profits. So I didn't enter another position there for this short. But that is a very good supply zone. Okay. So right now, I don't see any trade here until either price return back to this zone. Because right now, what we have here is liquidity all the way down here. These are liquidity. So the only valid demand zone we have here is this one here. This demand zone here. You can see I already put my pending order there. Or this one. If this one should fail, I target this one should fail, then this one down here. After there, the next zone I look at for is this supply zone here. Okay. So you can see market is all about patience. All right, you need to be patient. But if price for any reason react to this fractal demand here, then I see a confirmation to the upside. That doesn't mean I will not long to target that supply up here. What do I mean by that? Price can trade back into this zone. You see a shift in market structure shifts. Any demand zone created here, how we going to target this zone? I don't know if you understand that. This price can mitigate this demand zone. Then you see a market structure shift, taking out the supply. So at that point, any demand zone created, I will take a long and then target this supply zone here. Remember, in trading, you position yourself and you will react based on what market present before you. So that I mark this demand zone and this supply zone doesn't mean you need to sit down and wait until those zones. Market can create new zones. Remember, movement all the way from here to here and from here to here is a very long time movement. So if price should present a new opportunity around here, how we trade, because already this leg down liquidated this lows here. this equal low, this liquidity here. So there's the possibility that right now price can mitigate this fractal demand, take out this supply. At that point, I'll continue to the upside. So that is all for today. Okay, let me look at gold. For gold traders, those that like gold, let me just look at gold. Taking a look at gold, there are other pairs, but only these ones are the ones we'll look at for today. If you take a look at gold, starting from the weekly time frame, on the weekly time frame, there's nothing to do on gold. We only have this valid demand zone here, of which if price should go back, they are fine. Market mitigate this demand zone. Since then, in a ranging market. On the monthly time frame, the same thing you can see the kind of chart pattern forming on the monthly time frame, the ranging market. So if you cannot do it on the monthly and the weekly, then you have to come down to the daily time frame. Daily time frame, see what we have here was this supply zone with price traded into. Okay, I didn't take that supply zone because it was too big, it was huge. So I didn't take that trade. Rather, I was waiting for a shift in market structure before I enter again. And at this point, you can see after markets entered into that zone, you see rejection, a massive rejection that led to what? A shift in market structure here. I have a pending order here, but it's yet to be mitigated. Okay. And I'm targeting, remember, minimum of 1 to 2. So what I'm waiting for is for price to either mitigate my zone, execute my trade, then I begin to manage it to my take profits. If that doesn't happen and market price continues to come down, then I have a demand zone here. I have a demand zone here then to long, and then begin to target that high. Understand? Anything that will make market return back to this zone and it holds, then mind you, what you should be expecting is that gold is likely to now create a new all-time high. Then on the 4 hours time frame, you can see that zone, that same zone on the daily time frame. So if market should also come down, have a valid demand zone here, a very valid demand zone of 4 hours. So it's either you short here or you long from here, either of the two. So for gold, that's all about gold. This is the demand zone with this supply zone. Any of the two zones that price trade into first, take advantage of it and possibly make your money. So thank you guys for today. You have a nice day. Happy trading.